I'm William Kumwembe with Business Time. It is a magazine program where we bring you major business and economic news stories making headlines in the country, courtesy of Old Mutual.
Insuring and saving with Old Mutual means growing crops, growing jobs, growing a future. Creating mutual futures, your money invested for the good of all.
Coming up in the program today, we speak on sustainability and equity investing in Malawi as the money market seems to gain momentum. And also in the program, maize supply remains skewed on the local market, threatening food situation, especially in the rain period. Stay tuned. Hello and welcome. This is Business Time, and in our main story in the program today, Malawi has been deploying efforts towards popularizing the financial services market as part of the National Financial Inclusion Drive. Equity investment, a process of buying shares directly from companies or other individual investors with expectation of earning dividends or reselling the same to make some gains when prices are high, is gradually but steadily gaining momentum. I caught up with Old Mutual Malawi head of listed investment, Cuthbert Kumwembe, on strides towards making the stock market lucrative and sustainable.
Listed equity investment entails having a financial interest in any of the 16 companies listed on the Malawi Stock Exchange through ownership of the shares. So if you buy shares in any of those companies, you become a shareholder, and there are associated benefits as well as risks as a shareholder of those 16 companies.
You may hint on the associated. You've just attempted to respond to my second question. What are the associated risks and benefits of all this drive, of all the equity investing?
Thanks, William. So I'll start with benefits. So there are a couple of benefits for an investor on the Malawi Stock Exchange. Firstly, as mentioned, once you buy those shares, you are a shareholder of that company. And what that means is when the company does well and the directors decides to pay a dividend, then as a shareholder, you are entitled to a proportionate part of those dividends, depending on the number of shares that you are holding. Secondly, there is also an issue of capital appreciation, which is the movement in the prices of shares. Perhaps the question would be, what would trigger the movement in the price of shares? So look at it from demand and supply. When the business that you have invested in is doing well, you see many people trying to buy those kind of shares. So with a given level of supply, with elevated demand, you see the prices going up. So that movement in the price of shares is called capital appreciation. I think from my engagement with a number of retail clients, often there's a misconception whereby people think that dividend is the sole return when they're investing on the equity market. That is not the case. I'll give you an analogy of an iceberg. So one needs to look at the dividend. I would equate dividend to be the tip of an iceberg, whereby the huge base which lies underneath is the capital appreciation. So if you are a shareholder on the equity market, firstly there is that dividend component as well as the capital appreciation, which constitutes a significant portion of your return as an investor on the stock market. The other benefit also is that as a shareholder, during the annual general meetings of the companies, you are entitled to vote on any of the resolutions that is to be deliberated during the annual general meeting. I think in terms of the risk, obviously, any investment is associated with any risks. So firstly, I have in mind that if you're investing on the equity market, the return there is not certain. So unlike where you are investing in a treasury bill or a deposit, where you know with certainty a kind of return that you'll get either at the end of a given period, with the equity investing, the return is not defined, as you are investing into the future of that business, and what you would get depends on how things would span out at the end of the day. So firstly, the return is not given. Secondly, there's also the risk of volatility in short term. So what actually happens is normally listed equity is for long-term investment, because it can happen that over short term there could be a certain shock happening to the market that can affect the performance of the entire market. I have in mind 2019, where we had the COVID-19 pandemic, which globally caused havoc. And if you look at the performance of even global markets, they plummeted in that period. So those are kind of shocks that could happen in a year or so. So that's why I'm saying over short end, you might see that kind of volatility in terms of return on the equity market. But if you look at it on long-term basis, then the volatility is not much there. So if you are a long-term investor, much as there could be noise over short end, you are not worried because you are looking into the long overhaul. Over long term, equities have demonstrated to offer significant growth.
Now, what is your impression of the market this far? I'm looking at the year 2023. Why I'm asking these questions? There seems to be some positive performance according to commentators, considering that in the 9 months to date, there's been a return of about 90.9%. I think that's a substantial return. What do you make of the performance of the year this far?
Thanks a lot, William. That's a very pertinent point. Indeed, if you look at the stock market performance for 9 months to 30 September at 90.9%, in context of August 2023 inflation, considering that the September inflation is not yet out, August 2023 inflation stood at 28.6%. So if you look at 90.9 against 28.6%, that's a very strong performance. What that means is investors on the equity market, they have managed to preserve the purchasing value of their monies as well as also growth in real terms. In terms of the driver of that strong performance, to just give a context, if you look at our equity market structurally, 54% of the market the banking sector constitutes 54% of the market. And especially in this kind of environment where interest rates are high and the government borrowing is elevated, actually banks, in terms of net interest margin, they do improve. So that speaks to why you look at most of the banks in terms of their profitability, very strong because of the environment that we are operating in. At the same time, also there is also issue of increased levels of non-performing loans. Because looking at the environment that we are operating in, with a high interest rate environment, the cost of servicing debt becomes very burdensome. So yeah, there could be those kind of instances where there is increased levels of non-performing loans. Whether you ask me whether that performance is sustainable, it's a discussion for another topic. Yeah, we can discuss that at a later point because there's a lot of science that comes into play in terms of whether the 90.90% that we've talked about is justified by the fundamentals of the business. We may need another session to discuss the basis of that.
I would still put across to you, talking of sustainability, is there a correlation between sustainability and the equity market? Does sustainability matter in equity market?
Thanks a lot, William. Yeah, for that very pertinent point. Indeed, sustainability matters in an equity market. Yeah, so I'll give you an example to say, take equity market like one learning a business. If I'm an entrepreneur, I should be very much excited for a business that assures me of consistent performance over a period of time, other than having a business that gives you profit in 1 year, then the next of the years you are in loss-making position. You wouldn't be very much excited about that. I mentioned that equity investing is for long-term overhaul. So what it means is, if I'm investing on the equity market, I need to be assured of that consistent performance over long term. So sustainability really matters as far as equity investing is concerned.
Last but not the least, how would sustainability be incorporated in the understanding or the undertaking of listing equity investing in the country?
Yeah, thanks a lot, William, for that pertinent question. Yeah, so I'll start with, the issue of climate change. It's been a topical one as well as a global matter. And as Malawi, we haven't been spared. I think our memories are very fresh from the effects of Cyclone Fred, which caused havoc in the country, reminding us of the need to preserve the environment. So as far as sustainable equity investing is concerned, it looks at a number of factors. So firstly, we need to look at the environment that we're operating in. So when we are making this listed equity investment, we need to look at those companies that are cautious in terms of the environment that they're operating in, as well as also making decisions not to harm the environment but to preserve it in that sense. Another issue also under sustainable investing would be issue of strong corporate governance. I need to mention that strong corporate governance cultivates an ethical culture in an organization.
This is Business Time, a magazine program brought to you in partnership with Old Mutual. We'll be right back.
Ku Malawi timanena kuti chuma chili munthaka. Ndipo izi ndizoona. Mutha kuziona zimene zipali ponse. Dzina langa ndi Chris Gadimani, ndipo ndimayang'anira banja langa pogwira ntchito ku Galamax Macadamia Nut Farm. Zonse zimayambira pa Nazale pano. Timasamalira mphukira kuti tikwanitse kudzala mitengo yambiri. Mitengo iyi ikakula, timasankha mtedza wabwino kwambiri okhaokha. Timafuna kuti mtedza wa Macadamia wa ku Malawi uzidziwika kuti ndi wabwino koposa. Tikakolola kwambiri, timalembanso ntchito anthu ambiri. Ndimakhala onyadira kukhala nawo otenga mbali mu zimenezi.
From the soil comes endless possibilities. That's why Old Mutual is investing for the long term from the ground up. We call this creating mutual futures. Old Mutual, let's do great things every day.
Welcome back. Maize remains Malawi's staple commodity and it weighs heavily on the consumer price index, a formula for computing headline inflation. Retail price for the commodity went up by about 146% between August 2022 and August 2023, according to figures from the International Food Policy Research Institute. And quoted by the Reserve Bank of Malawi in its August 2023 Market Intelligence Report, the institution shows that at the end of August, maize price increased to 690 kwacha per kilogram compared to 320 kwacha per kg during the same period last year. As Justin Mkweo reports, due to continued rise in price of the commodity, domestic headline inflation also edged up slightly to 28.6% in August 2023 from 28.4% recorded in July 2023.
Reports indicate that maize prices have risen by approximately 146% year-on-year by last month. According to the reports, by last month, maize prices increased to 690 kwacha per kilogram compared to 320 kwacha per kilogram during the same period last year. Maize is Malawi's staple grain and the biggest contributor to the inflation basket. Therefore, its price movement has an impact on the direction of the inflation rate month on month, which is one of macroeconomic fundamentals. As a result of the maize prices increase, for example, domestic headline inflation edged up slightly to 28.6% in August 2023 from 28.4% recorded in July. The uptake was mainly driven by food inflation, which remained elevated at 39.4%, while non-food inflation moved up marginally from the July 2023 outcome of 16.8% to 16.1%. We engaged economist Bechan Chereni on what does it mean to the economy if maize prices continue to be increasing.
Yeah, well, let's talk about the macroeconomic fundamentals, because what that means then is that if inflation in general, that's the headline inflation, might be continuing to go up, and that is not good for other fundamentals such as interest rates. That again may not be good for exchange rate even, and other macroeconomic fundamentals. And also it simply implies that in general the welfare of the people is being jeopardized, because if maize is expensive, it means that many people may not be accessing the maize, and they may not buy food. Maize is the staple food for many Malawians. So if maize is expensive, that means that it's eroding into the household budgets of many people. But also other animal feeds are also made from maize.
Agriculturalist Leonard Jimwaza said as the country approaches the height of the lean period, the outlook is not pleasing and maize prices will continue recording increases. He said the only solution to the current problem is that the supply of the staple grain should be improved, a thing which has not materialized even with the opening of the Agricultural Development and Marketing Corporation ADMAC depots. Minister of Information Moses Kunkuyu said in an earlier interview that the good thing is that ADMAC markets opened and government will continue to flow the commodity to the markets. He expressed hope that the opening of ADMAC markets will improve supply and eventually reduce prices. But what needs to be done, more especially, so that the economy does not suffer due to increasing maize prices? Bechani Chereni again.
I wish the mega farm that has just been, inoculated or launched in the Lower Shire was a mega farm for maize, 1,000 plus hectares of maize. Think about that. If you can just irrigate that farm for 75 days to about 90 days, you are going to harvest that maize. And when you harvest that maize, it means that you can actually flood the market with cheaper maize, which means then that it's going to take down the general price of food. When you take down the general price of food, by the way, you must make sure that you are using organic fertilizers. You're not using the chemical fertilizers, because they have become very expensive, which makes the maize production itself to be even expensive, even if rains are okay. So we need to do winter cropping. We need to do, between now and December, we can actually harvest maize.
The 2022-2023 farming season faced challenges due to scarcity of farm inputs, especially fertilizer, below par affordable input program performance, and natural disasters, among others.
Now, in other business news, village savings have proven to be a very important model for mobilizing resources in communities, as 42.1% of loans accessed by rural people, particularly women in Malawi, are from village savings and loans associations. On the other end, formal financial services providers are being accessed by less than 2% of the population. This was said yesterday in Lilongwe during the Care International 2023 Global Village Savings and Loans Association leading events, and Director of Care International Global VSLA team said village saving groups are a trendy globally and meeting the help and the needs of many people to grow their future.
Well, we've brought 70 people from 45 different countries to Malawi, the warm part of Africa, because we want to learn together about what the SLAs do now and what we want to grow the SLAs to do in the future. We know that women have enormous capacities and that savings is just the first step of what they can do. And the big minds in the room today are really going to shape the future of what we do with savings groups for the next decade. That's the trend globally. It's not just in Malawi. Women consistently tell us that the money that they can save and loan to each other is built on that trust. It's built on a foundation of solidarity. Your friends, your neighbors are people who are invested in what you do in life, unlike a bank. There is a role for a bank, but for a woman who is seeking a very small loan, she can get that from her trusted group, and she can grow her capacities with the support of that group.
Now, Minister of Gender, Children and Disability and Social Affairs, Jean Sendeza, commended CARE for having a reflection on how best to design the implementation of the program that integrate the village banks, and for choosing Malawi as the venue for its event.
Today, CARE International, Malawi, they are here with the delegates from over 40 countries, from America, from Europe, Asia, and even here in Africa. So what we are discussing basically that we have the village savings loans associations, but how can we go beyond the savings? This is why they are here to make some changes, to have some changes in the model that the village savings loans are operating. So this meeting, they want to have resolutions on how best they can scale up, on how women can improve in their lives. With the village savings loans, women in Malawi, they've managed to take their children to school, they've managed to buy some assets, and they can even, have land. So village savings loans have really helped our women in Malawi. And with the Malawi Agenda 2063, we want to leave no one behind. So with this CARE International, where they are, want to improve the village savings loans programs, model, it is a very welcome development to us as a government, to us as a ministry, because we will see, more women now, being economically empowered. Banks have taken note that women are now on top of, savings. So they have gone into these groups of women, lending them some monies and even helping them on the technical support on how they can, access or even make value addition to whatever they are doing. We have also a program at the ministry, the Social Custody program. We are encouraging our people, to be in the village savings loans associations so that they can grow their savings. This is what we are doing so that they don't have to be at the same, level. They have to, change from A level to maybe A, B, C, D to upwards. And you have seen that village savings are everywhere. In the villages, in our cities, in the even at Parliament. We are, having, village savings associations. So that means that village savings are important and you can get easily the loan that is easy to access. So village savings are important to all of us as communities, as a public, and we want to encourage our the manner of savings, because we don't have to just consume, but have something that you can save and then use after maybe you have some other issues to grow your household in terms of accessing loans, or not accessing loans, but sending children to school, or even buying assets, having a house that is well thatched, not the grass thatched houses, but now we have to go into iron thatched houses. So village savings are the best way to go, and I'm encouraging that this meeting gives us good resolutions so that we can go forward with the village savings.
Well, with that story, we've also come to the end of today's edition of the program Business Time. It is a magazine program in which we bring you major business and economic news stories making headlines in the country, courtesy of Old Mutual. On behalf of the entire production team, my name is William Kumwembe. Thank you for watching, but always remember, if it doesn't make money, then it doesn't make sense. Stay safe and goodbye for now.
Brought to you by Old Mutual. Creating mutual futures, your money invested for the good of all.